The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 21, Nasdaq up 2, S&P's up 1.5. Gold contract down $1.50, trading at $14.79 an ounce. We got silver down 6 cents, $17.01 an ounce. Light sweet crude down 51 cents, $60, 43 cents a barrel. We're going to get those numbers this morning.
Crude, always some volatility. Wednesday's 10:30 a.m. Eastern. You got it?
And it's at a crucial point. $60, man.
60's the new norm, it seems like.
It is.
It is.
Notes and bonds. You get the 10-year down 5 ticks, trading 128.09. The 30-year off 12 at 156.14. King dollar. King dollar up 175 ticks. 97.397. Now, King dollar got in its higher range again as the pound got smoked yesterday.
Yeah.
The pound's at 130. That's below the day of the election, and the pound, that was the largest move in the pound in 1 year.
It almost made it up to 135
It did.
around that election.
It made it to
and boom, we're
135.
at 130.
Yeah.
I thought all the fear was gone.
Currency, folks, that is like a
Watch
monster
out.
move. Euro's at 111. The yen is out at 105, 109.55, and bottom line, folks, is that we had Cintas come out with numbers. And if you're worrying about this economy, let me tell you something. Cintas is a leading edge. Every restaurant you go in, every building you go in, the bottom line, all those mats you see.
Uniforms, right?
It's a great indication that, guess
entrance
what?
masks, restroom supplies, promotional products, and boy, oh boy, I mean, look at that chart. We don't even have to pull it full screen. You can see that run. This year alone,
Monster.
160, now pushing 275.
Yeah. Big numbers.
Big numbers, man. That economy.
Let's go over to our man, Mr. Kevin Hinks, at TD Ameritrade. Think or swim as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, you want to understand the options market, upside down, strategies in the option market, futures, outstanding program, 11 to 12 Eastern Standard Time. As we're kicking into the new year, great time to come over to our website. You're already on it right now, listening. Hit the TD Ameritrade banner. Bring up the system. Bring up the platform. Check it out. Great platform.
We got the simulated trading. We got the demo account right here, man. That's what we're playing on. You can see those one-day moves. How about the one-day move on FedEx? Following a two-day move, right? We got General Mills. There's still some serious action going on towards the end of the year, man.
Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You're right, Tommy. There is not much going on in the overall indices that, as we start to grind down here into the holiday season. But individual names, when they come out with their earnings, you're seeing it in FedEx. You're seeing it, you'll see it tonight in Micron and Darden and Conagra. Tomorrow, Nike. We still got a lot to cover, a lot of individual names. Now, the volume gets less, but some of the good names are still pretty strong names. And Nike, which comes out tomorrow after the bell, in my opinion, that signals the end of earnings season, right? I usually start earnings season with the banks early in the quarter and then end with Nike at the very end of the quarter. So Nike's trade on Thursday afternoon should pretty much signal the end of earnings as we know it, except for a couple stragglers.
Nike, we got it up. Pennies away from $100 on the dot, man, and that one-day expected market maker move, $4.04, so 4% one way or the other, man, when they come out with those earnings,
That's not bad either.
No, it's not bad.
For Nike.
Yeah, we'll look at it. We'll go through the process of making the trading decision based on the market maker move, based on the implied volatilities, based on your opinion of the name. We'll look at everything and make the best decision, or what our opinion is of the best decision for the right strategy to put on.
Yes, you gotta love it. That's and listening to the program, Kevin, it's pretty cool how basically you make a strategy, let's say today. And then, as you go into next month, well, the bottom line is that you can roll that strategy, you can fix that strategy, you can do a lot of different things with that strategy without basically just scratching the trade, right?
Right, and especially this time of year, Tom, when you're seeing the VIX trading where it's trading right now, you should be looking 30, 60 days out.
Okay.
Because the volatility you're buying there is all pretty depressed.
Yes.
And that vega, that sensitivity to implied volatility, that's how you adjust that is how far you go out in the calendar.
Right.
More vega, the further are you out on you go out on the calendar. Less vega, the closer to expiration you go. So that's one of the decisions you have to make: the duration of the trade and how much vega you want. Right? If your volatility is sitting, like Oliver Rennick and I just talked about Microsoft.
Okay.
Microsoft IV percentile, which where it sits on the range from lowest to highest is a 2%. So it's almost as low as it'll possibly get in this environment.
That's pretty cool, right?
Our strategy there, that should drive the strategy of how you trade Microsoft. And I talk to our customers and viewers about, look at the open interest in the January options in Microsoft. And I'm talking about the 160s, the 165s, the 170s, massive open interest in these names.
Interesting.
But those people that have those positions on, guys, may run out of time.
Okay.
Because the expected move is only $6 between now and January. You go out to March, now you've got $13 of expected move. Now that could cover that move that some of these people in January options are looking at.
Yeah, that's intriguing how you have to put those two together. That's
right church, wrong pew.
Yeah.
And it's pretty cool. We have the platform up here, Kevin. We get the options chains up there, and you can see the numbers right next to what Kevin's talking about, folks. You know, you get the January contracts.
Gives you the expected move up or down, and for each expiration cycle.
I love those numbers, man, because it's like, okay, if I'm gonna play with, you know, the January numbers, what kind of volatility am I looking for? What kind of volatility is the market pricing in? Well, right away, implied volatility 16.8%, about $6.60 in January. And like Kevin was saying, March, $13.
Wow.
Boom, right there.
So that gives you a chance to cover that expected move that all these people in January are playing for, but may run out of time or not get enough of the move that they're looking at. And that's the difference between maybe a winning trade and a losing trade is the duration you picked.
Yes. And folks, as Kevin's going through this is something I want you to understand. This is on every single day, and you can actually see it. I mean, so it's really cool understanding this, okay? Because what happens if you read it in a book, you're going to throw the book against the wall. I did it 1,000,000 times years ago, right? I mean, that's reality. Do you know what I mean?
The best way to learn, guys, is real life, real-time examples. And if we can give those as we're teaching the concepts, I think it gives you a better chance of grasping and retaining those theories.
Yeah, there's no doubt.
I agree.
There's
Definitely.
no doubt. And when I'm listening, Kevin, what does happen is that there's so many really different strategies. I guess it's understanding the implied volatility for sure.
Sure.
That, you know, but there are so many different strategies, but in that context, there really isn't that many. You know what I mean?
Right.
If you battle, take one at a time, then you can digest that. Like I tell people, even the currency market, take one at a time. If you try to get it all, man, you're done. You know what I mean?
Yeah, because you know what, Tom? What you're saying is accurate, and here's why. Most advanced option strategies are merely the combination of two fundamental ones.
Yes.
Right?
Yes.
When you're combining them, it looks more advanced and, you know, extreme, but it's really just a combination of two fundamental strategies combined together to make an advance.
Right here, folks, 45 minutes from now. Check it out. Kevin, you have a great one, safe one. Of course, we look forward to the program.
Thanks for having me on, guys.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow up 22, NASDAQ up 3, S&P's up 2. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 24, Nasdaq's up 7, S&Ps are up 2.5, and we're going to get those oil numbers, but we're going to show you something, folks. This is pretty cool. We're bringing up Boeing, and we're bringing up the supply chain of Boeing.
That's right. So on the left-hand side, right, we're going to have the suppliers.
Right.
And on the right-hand side, we're going to have the customers, I believe.
Yes.
Is that correct?
Yes.
I saw that somewhere.
Yeah, that's right.
Where does that say that?
Boeing's customer. Well, Boeing's in the middle. Customers right there.
Yes, here we go.
Yeah.
So customers are sorted by revenue on the left.
Right.
Suppliers are sorted by cost of goods sold on the right. All right, so we're pulling up, Spirit Aerosystems.
Yeah. That's their biggest supplier.
Yeah, so this percentage number you're seeing here, and you'll see down there, it represents what this supplier gets from the central company, that being Boeing on this.
That says 80%.
That sure does, man. Now, what you started talking about is there's an article today just talking about, now that company obviously lives and dies by Boeing.
Right.
A company like General Electric isn't going to live and die by Boeing, but, man, it's going to impact it because you're talking about 2.3%, 2.38 to be fair, of everything GE does is represented by what they're pushing out for engines for Boeing.
Right.
Now, what's interesting here is you click on GE, now it puts GE in the middle. All right, so now you're going to get suppliers for GE, and then you're going to get customers, and you can see that right away. Boeing, what's on the top? The good old USA. Who are they selling?
Look at that. So the government, the government's the number one business.
4% of the revenue coming from the United States of America.
Okay.
But then right after that, 2.3%. And guess who's number 3, man? Airbus. And Baker Hughes. All just huge.
That's right.
Yeah.
And so the Journal had this morning, folks, it's $400 million a month that GE is going to get hit. And let's just pull it. We probably get the
Jump
article.
around. Go for it.
That's going to get hit right now because that's what Boeing is buying off them in number 2.
Okay, yep.
In engines.
Yeah,
and,
so you got a halt in that production.
That's cash flow, man.
Oh, for sure, right.
And guess what? GE needs cash. So
it's taking its sweet time to load here. But that would make sense. That was the big story when they were going to halt production. It wasn't just that Boeing was going to take the hit, right? It
Right.
was that the amount of suppliers up and down the supply chain that's going to reverberate through, and that's how you see that mammoth hit.
Number 3, go to 3. Yeah.
Okay.
That's Wall Street Journal. So yeah.
Let's see if it pulls it up. There we go. So the Boeing production halt is likely to hit cash flow at company, which makes the jet's engines, that being General Electric.
Yep.
GE will likely take a significant hit to its cash flow from Boeing's decision to halt the production of the 737. GE makes all of the MAX's engine through a joint venture with Francis Safran SA. When Boeing in April cut monthly production of the plane to 42 from 52, it reduced GE's quarterly cash flow by $400 million.
Okay, quarterly. Yeah.
So that is about $100 million a month.
Yeah.
The suspension of production, Boeing announced Monday, if prolonged, could reduce cash flow by much more, as analysts warned the GE. Now that $400 million, that was only going from 52 to 42.
That's right. That's a reduction.
Yeah. So GE's management has flagged the problems around the MAX in regulatory filings and public comments, but it has also said the impact is temporary. Well, that's GE telling you that, of course. They're not going to say we're in trouble forever. It's going to create a significant cash drag for GE, said an analyst. He added that one engine program cannot make or break the fortunes of this company. That's kind of what we're saying. It's only 2.4%. But man, oh man, it's quite a company to talk about 2.4% just disappearing overnight.
It's not hurting the stock. That's interesting.
No.
But that's monster money.
It has pulled back to almost 50 cents in the last 4 days. So you're only an $11 stock.
Right.
So that's quite a hit for sure.
Oil.
Oil. All
Okay.
right. Let's see what we got going on, man. I'm going to jump over here. We'll get into that oil contract. Let me refresh this. So it's Wednesday. It's 10:22. Oil, a little bit of volatility so far this morning. We're trading the February contract at $60.40. We'll pull up the contracts for crude. And let's quickly take a look at, we have 60.50 with an option. And let's jump back. I'm going to jump back and see what we're expecting here, all right?
Yeah.
We'll go into our GLCO for global commodities. Nope. I think that's right.
Will they change it again? 1 second.
No, it's there.
Yeah.
Bloomberg's taking his sweet time this morning. There we go. All right. Crude oil, year to date, up 33%. Not a bad trade. We'll get into the whisper. We'll find our crude number. And the market is expecting a decline between about 1.7 and 1.4 million barrels. All right. I think we have plenty of crude. That's going to be my fundamental take no matter where we go. So with that in mind, we're only going to go for a decline of 700. That makes sense?
No. Yeah, no, that makes sense.
That would make sense.
That would make sense.
All right, so there's going to be a little bit more oil than the market might expect.
That's right. That's right. We got to get up on our rank. We're number 7. Now we're number 36.
That's how I want to put it in because they make you put these. So the whisper number is the Bloomberg Turnable Whisper survey number, median analyst estimate. Jumping back to the charts of where we are right now. So you have the contract trading at $60.38. See what kind of volatility. I'm just going to jump right to the noons and see how they factor out. That doesn't have. That has 60.25. You're 15 pennies away. Let's jump to the 230, see if we can get a 60.50. Here we go. So $60.50. We got $3 to the upside, and we have exposure till 230. All right, let's see what kind of volatility they're going to make us, premium they're going to make us pay for this trade. Getting it on the bullish side, you're going to be able to buy it at 60.70. Now the contract's trading at 60.37. It's just trading at 60.40, so you're buying it almost 30 pennies above the market.
Yeah.
But you're only risking $20. Not bad. Your profits are, your risks cut at 60.50. You have profit potential up to 63.50. And pretty similar trade on the bear side, $3 potential. Now in this one, you're going to have about 10 to 12 pennies of intrinsic value in there. You would be selling this contract, and that one's going to run you pretty comparatively. The only difference in these two contracts is the intrinsic value that you have on the bearish side because it's under that 60.50 point. Looking at $52, which is about 52 pennies. Not that bad for a market that's jumping around with keeping in mind you have $3 of potential and you have exposure until 230.
Right. And it seems, not that $60 is a magic number, but bottom line has had a hard time cutting through the $60. So
yeah, it's been hanging out there for a little while.
Right.
It has.
Yeah, you can get a make or break. Oh, this is cool. Mr. Bill told us, okay, API reported a build of $4.7 million.
Maybe I should go revise that guess to a build
cow.
versus
Thanks, Bill.
Yeah.
That's crazy.
That is crazy. So the numbers are locked in.
This is skewed, man.
We're at a decline of 700,000. The market looking for a decline of 1.7 to 1.4. But it's always interesting when the API is so far away from what the analyst estimates are looking for in that number. And let's just jump around even because we also get gasoline inventories, and they're looking for a big build in gas.
All that snow across the country. A lot of, less driving.
I guess so, man. It's a shortened holiday season maybe as well.
It was ice rain yesterday in Boston.
Oh, I did not know.
Yeah.
Okay. It was raining here in Tampa as well, but no ice. No ice.
No ice in Tampa.
Thankfully, seriously.
Today's chilly, though, folks. It's 72.
I was waiting. I was going to say chilly by Florida standards, and it might be 64.
Yeah. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 16, Nasdaq up 9, S&P's up 1, gold's down $1, silver's down 6 cents, and good old King Dollar's up $1.50. Come right back.
The TFNN Tiger Dollar Holiday Sale is back. For 2 weeks only, we're offering the largest bonuses of the year on all Tiger Dollar purchases. Normally, you can get a 10 to 20% bonus on your purchase, but for the Tiger Dollar Holiday Special, we've doubled the normal bonuses where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars can be used for all TFNN newsletters, products, or services, are fully transferable and never expire. If you're a current TFNN newsletter subscriber, then this is a great time to buy Tiger Dollars and apply them to all your future transactions for instant added savings. And if you're considering signing up for any TFNN newsletters, webinars, or products in 2020, then get up to a 40% bonus now before this sale ends Sunday, December 22nd. For all the details and to purchase your Tiger Dollars with up to a 40% bonus, visit the front page of TFNN.com today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 20, Nasdaq's up 7, S&P's are up 1. And crude, what do we got here?
Crude fell 1.09 million barrels. So under the analyst estimate, above where we kind of put it, but still a decline in the inventories. And gas, as before we jump around, pretty much pegged it as well, an increase of about 2.5 million barrels. Jumping back to the charts, seeing how that market is reacting right away. A little bit of a pop, man. Pretty interesting. Right up to $60.70.
Quick 20.
We have more
20
oil.
cents.
No, it's the other way, isn't it? Right? It's a less of a decline.
Yep.
So there's more of a supply than the market may have thought.
Right.
And usually that would mean lower prices because the market's flooded with supply. People might pay a cheaper price if there's more supply. So maybe the market was kind of hinting towards, like Mr. Bill was saying in that den with the API coming in at 4.7 million barrels. Market saying, oh, we still got a decline, man. And boy, we might see $61 crude in a matter of seconds right now.
60.87.
60.87, that's right. And the contracts we were looking for had a pivot point of about $60.50. So just kind of line up, this would have been your bullish spread, right? They were going to cost us about $52. Now, what's always interesting here is here's the bullish spread. You could always, if you wanted to, close out that trade, take your $40 right off the table. You're still in it for about $9. If you really felt that was going to pull back, this contract stays active. Now, what's really cool here, just keeping, even with the bid-offer spread, which is why this is a cool trade, you could close this out right now almost and get your money back if you didn't like what happened. You know, you're looking for a bigger, I mean, there's still, you know what I mean? You could look at bullish side's 45, bearish side's $50. You're paying some commission, so you lose a couple bucks. But just cool to keep in mind there. You know, maybe you're playing that just for a huge miss. Maybe you're playing it saying, you know what, man, I think API, I think it's going to come in with a build of like 4 million barrels. And you go, it didn't quite come in where I thought it would. Right. But boom, as we speak, $61 in the price of February crude, man.
And I think the day, let's just
the Saudis are popping some champagne at the Aramco offices this morning.
No doubt. You know, and they got that to $2 trillion too, yesterday.
It might be higher with $61 crude this morning.
Exactly.
Yeah.
And now this is going to be a delayed quote, folks. I just want to see what the high was of that day. 61.48. Oh, wait. Oh, 61.48 was the high of the Saudi blow up. Okay.
And to be fair, that is the market open. I believe overnight that spiked to $62, $63 even before that opened on that day.
Okay.
Yeah. So, very short-lived high though. Very short-lived. The Saudi fields got attacked. Market spiked, and then everybody said, "Hey, man, we got plenty of oil no matter what."
No doubt.
Yeah.
And the XLE is not following it. You know, you're up a few pennies, but the XLE in general just is still a laggard out here.
Just checking back real quick because it's going to move.
Strong.
Yeah. 61 bucks on the dot. We'll see where we'll check back in throughout the hour.
It's a strong bar.
Yeah.
So. Well, we got to go to FedEx, right?
I mean, nobody else is going there lately, I guess.
Yeah.
But we'll take a look, man. I said to you during, I was getting ready for the 10 o'clock update, right? You're in here getting ready as well. And I said, hey, how about those execs at FedEx when they get the call from Amazon?
Right.
They know the news is going to break one day prior to their earnings, that they're getting cut out from third-party deliverers.
Yep.
And they know they have to come on Tuesday night at 5:15 and tell the market that they're going to dramatically miss their estimates, and that letter got sent out to third-party suppliers Sunday night.
Right.
That is quite a storm.
Because in their statement, they said they were wicked slow in November, and their expenses went up.
Yeah.
You know.
And you said you had a personal experience with Amazon packaging, having trouble.
Check it out. Yesterday, I had got the email from Amazon Sunday, no problem. Monday, the package is going to be there.
Yep.
It had to be there by well, I thought it was going to be there yesterday. And they sent me the email this morning. Sorry, it might be there today or tomorrow. So they're 3 days late now.
Yeah, it's a bummer.
That's a pretty. I mean, that's FedEx. That's FedEx. That's you, FedEx.
That's right.
You know, even if it's not,
they're
FedEx
on the
is
naughty
gonna get blamed for it now anyway.
They are. That's right. I know. Yeah, but down. I mean, you're talking about. We were just at 168, man. You're now down $20 from 168, where we were to start off the week.
Right.
Yeah.
And to get some monster volume.
Yeah.
Let's go to John in Philly. Hey, John, what's going on, brother?
I'm doing very well, Tom and Tommy. Thanks for taking the call.
Morning,
Absolutely,
John.
Man.
Thanks for calling, man.
Say, Tom, I wanted to call in and ask you questions regarding the T-Note futures, the ZNH0 contract, and the corresponding U.S. Treasury 10-year yield. I was wondering if you could open up both those charts, the futures and the yield, bisect them towards giving us some clues and help
This is a different
regarding
symbol.
the question,
It's gonna be the
where
10-year.
might
That's
the
how it shows up.
ZNH0 contract bottom out?
Okay, so we're talking the 10-year, John, right?
Correct.
Okay. So, okay, we're at 128.08. The way I'm looking at this 10-year is that you still want to go a lot higher. You know,
Lower in price, higher in yield, or higher in price? Just 'cause-
higher in price, lower in yield. So
Okay.
what we're doing here, right? November 7th is your benchmark. And I can bring up the old contract. November 7th, 127.30 is the low. We came down hard last week with 2.5 million. You get to 128. We come down hard the next day and rejected it at 129, at 127.09 with 2.7. Now we're coming in. I want this test. We're coming into this again. You can see that the volume is contracting like dramatically. Because what I've found, John, is that if you're coming into a downdraft, meaning November 7th, and you still basically get monster volume before the low, it's really hard to blow that low out. And, you know, we came down twice, and now you're coming down with nothing. So it's, to me, that's still a bullish occurrence. I mean, you know, if it came down there and rejected that at lows, that to me would be a buy. And I think this, you know, the bonds and notes, they still look to me like they want to go higher. If you look at the TLT, you're going to see, you can put the, you know, I know you have futures, but folks, if you put the TLT in together, you're going to see that you can put the volume in it, and this is, the TLT is coming down with dramatically lighter volume. So.
And so you'd be looking for lower rates as well, as we sit at almost 1.91% on that yield of the 10-year.
And it can go hit 2 first. I mean, you got, if it comes down to that November 7th, is that, look, see, that's November 7th too.
Yep.
That's 1.971. That's what it wants to test. 1.9713, right? Or 1.9064. You know?
Excellent, Tom. That's just what I was looking for. I appreciate that. We'll see if we can't use that in some trading in the next week or two.
Yeah, so what are you looking for in bonds this coming year, John? Where is your head at?
My suspicion is very similar to the view you state, namely that that 10-year yield is rising a bit but won't rise a whole bunch further.
Yeah.
And the corresponding futures coming down and won't decline a bunch further. I am guessing the Fed will be very instrumental in managing that rate from going up, those futures from going down.
It's so intriguing, folks, because, you know, we were thinking the same here. But I know John, me, anyone who trades a lot, you'd love to see it turn because it would be a monster trade.
Sure.
You know
Thanks so much.
Thanks,
John.
man. Stay right there, folks. Tommy and I are coming right back.
Yeah.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, as you come over to our website at TFNN, you are going to see we have our Tiger Doll sale going on. That is ending this Sunday, which is December 22nd.
4 days left, man. That's it.
Pretty amazing.
That is. So right now you can get up to a 40% bonus. We've doubled the bonuses that we normally give away with Tiger Dollars. You can get a 20, 30, or even up to a 40% bonus on what you spend. Tiger Dollars never expire, can be used for any TFNN newsletter, product, service, charting software, everything we got out there. And I encourage people to take advantage of it, man. Whether you're a current subscriber right now, no-brainer. You purchase Tiger Dollars, immediately you'll get an email with those Tiger Dollars contained. You apply them right to your account. If you have any questions, just give us a call. Allison and myself will be able to walk you right through it. Very simple process. And then they're automatically applied to your account going forward no matter what you do. So it's a very simple process. And if you're thinking about signing up for anything we do, Steve Rhodes, Basil, Dave, Larry, yourself, Taz Profile Scanner. You spend $500, you get $600 Tiger Dollars, $100 bonus. You spend $1,000, you get $1,300. That's $300 bonus, and you spend $1,500, you get $2,100. A 40% bonus.
The big number.
It is a big number, man. We have a lot of people taking advantage of it because it's a great deal.
Right.
If you're a current subscriber, I really encourage it. And if you're thinking about signing up for anything, as I said, get your Tiger Dollars. They'll be in your account. You can use them. And the money-back guarantee still flies for Tiger Dollars, you know? So if you're trying things out, you purchase your Tiger Dollars, try the newsletter, 30-day money-back guarantee. So check it out. Runs through Sunday. We only do a couple of these a year, and I know people usually wait for it. And you better not wait too long, man, because that ends Sunday.
And, you know, as you're over there, folks, okay, Tommy's doing a morning market update every morning as well as the afternoon. And this is a great way that, you know, guess what? You wake up, you want to see what's been going on. It's a quick read, get you straightened out, get you going for the morning.
Straightened out. You need to be straightened out in the morning? No?
I do.
I guess you might. I know. Where does that come from? Get you straightened out in the morning.
I definitely do.
You gotta, yeah. Okay.
I have to always be straightened out.
I guess. They know.
And then in the afternoon, folks, okay, you get an afternoon report. They're great reports, man.
And, man, I had to put the headline up because we haven't even talked about it yet.
Right.
And the president looks to be getting impeached today.
Right.
And pretty remarkable. You get the market at all-time highs. You got the House talking about it today. Looks to be that he will be the third president ever to be impeached.
Right.
But not too much discussion of that in the update because it's out there, but it's not driving too much of the action out there. So it's not something that I focused on at all, but it is something that you have to talk about, man, because historically, pretty remarkable third time ever. But what did I feature first and foremost?
FedEx.
FedEx, man. Pretty remarkable slide that they had overnight from their earnings release at 5:15. And then you can see on the TD Ameritrade Thinkorswim charts, there's the conference call that starts, and nothing on that conference call to quell what they put out in their numbers, and then even this morning dropping further. But also, General Mills, we haven't talked about them yet this morning. They had their earnings. Pet profits, pretty dramatic. But check
16%.
Check out the sell-off, though, man. You got to pop all the way up to 56, 63, and sell-off, though, right back to negative territory. We'll pull that up briefly. And then just going over the market action, where we are in terms of S&P chart at about 9:30. Gold with some volatility this morning, right?
Yes.
Not sure what kind of that acceleration. You got crude oil, as we've covered as well, and then the bonds. And this is why, so on Thinkorswim, I know John had said the symbol ZN, so they show up ZB for the 30-year,
Okay.
and then they show up ZN for the 10-year on some of those platforms. And then you get the 9 a.m. update if you want a 3-minute update of the video update as well. And then don't forget about those Tiger dollars down there right before that sale ends on Sunday.
And this afternoon, folks, at 3:15.
Yeah, speaking of gold,
Yeah.
those gold bugs,
It's
quite a man in the gold industry.
I got Rob McEwen coming on.
Yeah.
So this will be an intriguing one because that equity has been getting hit. I mean, in a big way. You know, you're talking.
I'll be listening to that, man.
Yeah.
Interested to hear what he has to say about
know.
McEwen. And just talking about, I imagine you'll ask him what's going on with McEwen versus the price of gold and why we've seen that decline from $2 down to $1 from September through December, man.
Right.
Yeah.
Well, what I had done over on his website, they had done a webinar yesterday about Black Fox, one of the exploration companies. So I was listening to that yesterday too. But there's a lot of moving pieces, so it's going to be pretty cool.
Yeah.
You know what I mean?
Yes.
There's no doubt.
Definitely.
So let's go take a look at the other higher volume equities out here and see what we're looking at. I know Kevin said Micron's going to come out with numbers this afternoon. That's going to be a big number.
Definitely.
Look at Facebook's up $5. What's moving Facebook? My God. You know what's moving Facebook? Now, I'm surprised that this hasn't happened before this, that they don't do a real broadside. Because what you had out here, it's pretty amazing, actually, that Facebook is up $5. And what had happened in Germany last night is one of our Fed governors, is that it right there? Yeah. Lyle, I think her name is Lyle Brandon.
Lyle
Brandon warned the dangers of a digital currency proposed by social network and giant Facebook could pose to consumers and financial stability while offering a potentially valuable tool to criminals. What this article is about, folks, which she gets into here, Tommy, is that this was in Frankfurt last night, I guess. Yeah, is that she gets into that there's no doubt that Facebook could pull this off.
Do
you know what I mean?
For
that
sure.
they're so big, and what she's talking about.
Facebook has a marketplace they already have,
Yes.
that they facilitate purchases. What's to say that they just say you have to do it in that currency?
And it can be so fast.
Right.
That's she gets into the aspect, hey, man, everyone better pay attention to what's going on here because they have the wherewithal
And I think
to
that's
basically.
the quote there. A significant concern regarding Facebook's Libra project is the potential for a payment system to be adopted globally in a short time period and to establish itself as a potentially new unit of account.
That blow everyone away.
I mean, you better hold politicians accountable if you hold them accountable for anything to make sure that Facebook doesn't start controlling our currencies, folks.
Could you imagine?
Yeah.
Worldwide.
I agree.
That'd be the worldwide deal, not just country by country.
Yeah.
Talk about squeeze. My God.
Yeah.
Right?
And there might be what is actually getting the acceleration, that they're getting a target raise at Deutsche notes app improvements. So they get an upgrade. Maybe that's pushed them a little bit.
Yep. So let's see what else we got out here inside the higher volume equities. And it looks like, yesterday, folks, that we went sideways, light volume. It looks like the same thing's going to be out here today.
Yep.
You get Apple up $1. That's no big deal. It's a new probably new all-time high.
Of course, Facebook down 16.
Yeah.
Macy's is up 55 cents. Not bad for a $16 stock.
No.
Yeah, 3% pop.
Yeah. And let's go. Let's see. Let me pull up Amazon here and see what's happening with Amazon. Because I get a feeling that what we're going to see here, folks, FedEx is getting the heat right now, but Amazon could very well get the heat when all said and done. If, in fact, Dave White had that experience yesterday.
Yeah.
I had the experience today. If that travels in the next week and a half, it's going to be like, hey, man.
And I said to you, they will try and make that right. You can't make it right when a package doesn't show up, right? There's no way to make it right if it's not showing up by Christmas or a birthday or whatever it is. But in Amazon's defense, the one thing they've always been great at is they try and take care of the customer first and foremost. And so they maybe, I don't know what they do nowadays, but I had days in the past, I'm going way back, where they didn't get a package there, they give you 3 months free of Prime or something like that.
Yeah.
They understand that they got to keep the customers happy. It's worth it in the long run. They can't just say, sorry about that, we won't charge you shipping. for that product. You already get it for free, or you know what I mean? They have to provide something. So they're pretty good at that. But guess what? That's going to cost them money.
Yeah.
That's going to hit them. Yeah.
Dow's up 15, Nasdaq's up 11, S&P's up 2.5. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, we got a question now. This is a great question because this is like a, you really better understand what you're trading here. And what the question is why is GASL up while natural gas basically is down, okay? Well, what happens is that GASL doesn't trade on the price of natural gas. GASL trades on the equities inside of the ISE natural gas index.
Revere natural gas index. Let's just get the exacts as people put. And it's a 3 times bull.
Yes, 3 times bull.
Then you look up the ISE Revere Natural Gas Index, consists of securities that derive a substantial portion of their revenues from the exploration and production of natural gas. And we haven't looked up the chart yet, but there you can see, you know, that versus we have the chart of
natural gas. That's been going down.
Yeah. Now, so you look at, you know, from November November 20th, we're up dramatically in that index versus you pull over the actual underlying natural gas contract, you're back in November, you've dropped from about 270 down to 226.
Right.
So you really got to understand what's in there, of course, and that index, GASL, 3 times bull of the natural gas revere, which is securities versus the actual commodity.
Right. And you want to actually know what securities there are, folks. Okay?
Yeah.
Normally we can hit a button to put hold in this, but in this case it doesn't say it.
They don't pop up for some reason.
You got to hunt them, because ETFs can be all different. And in this particular case, you see that's the perfect situation that is totally different.
Yes, definitely.
There's no doubt about that.
And let's just check back in. Speaking of commodities, one last check for the price of crude. Just hanging $60.75 since that number.
Stay right there, folks. We got Thinkorswim coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Hope everyone has a great day, safe day.
Thanks, man.
Go get him, folks.